financial life. Ooh, there we go.
Sorry.
The important part. So in case anybody was surprised by that, we are recording this presentation, which is actually a good thing because there's a lot of information that's going to be heading your way over the next hour. And so ultimately what we're trying to do is provide a good amount of information, not to overwhelm you. So this gives you a good opportunity to go back and revisit some of the things that we may have missed. So greatly appreciate the invitation from the Winnetka-Northfield Public Library to come speak on a topic that's near and dear to our heart. And so with that, we're going to get started. So I start every presentation almost the same, which is an ode to Dr. Frank. So Dr. Frank was a client of ours who ultimately turned out to be a very good friend, even though we were 50 years apart. And so I remember one day coming back from one of our local industry presentations where I kind of knew the topic and I kind of knew the material that was going to be covered. And I told Dr. Frank, basically, I kind of checked out, early on in the presentation. And in his very gentle, wise way, said, Ed, what you're looking at trying to do when you go to presentations and you may think you know the topic, is what you're looking for is one or two nuggets. You're looking for some information that will either reinforce or add, new information to your knowledge base. And so many months later, I was at a national conference for our industry, and I remember sitting down in one of the sessions, and the topic I was kind of familiar with, but as soon as the presenter started speaking, it was almost like nails on a chalkboard. And I remember literally getting ready to stand up and walk out, and then I had Dr. Frank in my head say, hey, don't forget about the nuggets. And literally sat back down, and after an hour presentation, I looked down, I had 2 full pages of notes, which again reinforced to me the importance of being present and really listening in the presentation. So from my standpoint, that's how I do my presentations. I put these presentations together not to necessarily overwhelm you, but to provide 2 or 3 different pieces of ideas. When you walk away or you turn off this presentation this evening, you'll have maybe something new or something to kind of work on from that standpoint. So ultimately, the goal is to provide you with a couple pieces of information that'll be new. And again, if after the entire presentation, everything that I've told you, you've already known, I've just re-solidified in your mind that you're on a good path. So the other thing I want to talk about is the rule of thumb. So what I mean by that is oftentimes people are like, hey, Ed, I heard I should be taking Social Security at this age, or I should be doing this. And I'm like, well, where did you hear that from? Well, I heard this from this financial guru or this person online, or I read this, or so on and so forth. And what's important to remember is that a lot of in this presentation are rules of thumb, but don't forget that each of us is an individual. So you've got your own fingerprint in regards to, sort of your financial life. And so that rule of thumb may be good for the masses, but it's not tailored to your specific individual situation. So always try to remember that the rules of thumb are good. They give you basic guidance, but then, that individual information, that individual guidance is critically important going forward. So I want to start with the disclaimer. I'm not a big fan of disclaimers, but it's important. So we're not giving investment advice. We're especially not giving you legal advice or tax advice. And so this is information coming from me and not the the Winnetka-Northfield Library. So I want to start with the big picture on what is financial planning. Oftentimes when people come to us and they're interested in kind of what we do, the first thing that they start with is, hey, I'm looking for a financial plan, but really what they're talking about is just an investment advice. Hey, look at my portfolios. And this is sort of ubiquitous amongst our industry in that when you go in and you're like, hey, I'm looking for financial planning or I'm looking for financial advice, oftentimes, frequently, they focus in on how much money you have, what's in your portfolios. And that's kind of where it ends. And what's critical to remember and what kind of drives us in the passion in the industry is it's just not about one particular silo. It's about comprehensive financial advice. And so kind of what does that mean? Well, it's looking at not only your investments, but looking at your estate plan, your tax plan, and what kind of goals you have, and not only goal development, but goal monitoring as well over the years. And so again, it's really important to remember the interconnectivity of all these different elements. You know, your investments affect your estate plan, titles affect your estate plan, your goals affect all these different things. So when you're seeking out advice, make sure you're very clear on what you're looking for, because again, oftentimes in our industry, they'll kind of tunnel you to just the investment side. So the outline is we're going to go through an organizational quiz, nothing to be worried about. You didn't need to study about this. We're going to talk about estate planning 101, which is sort of the foundational element of your financial house. So of all the things that we focus on when we're working with clients, we start oftentimes with the estate plan, because if that's not in place, it doesn't matter how big your financial house is, that foundation is really weak. Then we're going to talk about making sure that your accounts, your bank accounts, your financial accounts, your beneficiaries are all aligned with your estate plan. We're also going to go through one of the most popular questions we get from our clients is, what do we do with all the information? What do we do with the paperwork? Do we keep it? Do we toss it? Do we shred it? Then I'm going to talk about something that's really important, which is know your identity. One of the important parts about being financially organized is understanding who has your information, right? Making sure that you're not allowing yourself to be caught up in identity theft. And then we're going to talk about lost and found, that if you don't follow any of this information, where do all of your assets basically wind up, and how are we able to get those back? So let's start with a quiz. So do you think you are well organized, fairly organized, or don't ask? So Joe and I were talking about putting a poll up during here, but you know, from a technology standpoint, we're just going to skip that, not to get anybody. But you know what? Where are you? And so oftentimes what we find is people are on the lower half of the threshold, that they're fairly organized. And you know what? I don't want to talk about it, which again, from our standpoint, is fundamentally important to sort of go through that. So let's go through an organizational checklist. And this is also sort of kind of an outline of what we're going to be talking about this evening. So do you have a current legacy plan in place, right? So a legacy plan is another name for an estate plan. Do you have advanced directives? So you're disabled, your mental capacity is lowered. So do you have a power of attorney? Do you have a living will? So do you have a will, and does your executor know that they're the executor? Have you completed a wish list of your personal effects? Are your financial accounts aligned with your estate or legacy plan? Are your titles and deeds of property aligned with your legacy plan? Your retirement accounts and your life insurance, are those beneficiaries up to date? Do you have an organized system of your records, you know, for your heirs, right? If something happens to you, does somebody know where all of the information is? Do you have a current and up-to-date emergency contact list? This is critically important, especially if you're a widow or a widower. Does someone know where your information is? And then do you have relationships in place to help you with this, to help you stay organized? So let's talk about legacy planning. Again, estate planning. Oftentimes what I found in my career when I'm talking about estate planning, what comes to mind are people are like, well, I don't have that much money. And so what's kind of funny is when I did this presentation earlier, years ago, I found myself with a younger audience, and they had no idea who the first three people were, right? They had no idea who the Beverly Hillbillies with, or Thurston Howell and his wife Lovey, or JR. So we're bringing people in like Lucille Bluth from Arrested Development, or Lucius Lyon from Empire. Then they kind of understand what we're talking about. You don't need a fortune to have a legacy plan. Nearly almost everyone on this presentation should at the very minimum have powers of attorney for property and healthcare, and have a will, without a question of a doubt. So let's start. So do you currently have a legacy plan in place? Do you have at least a simple will that says, hey, you know what, if I pass away, if I die, here's where my stuff goes? So taking one step back, the two topics we're going to talk about this evening are death and disability. Not necessarily fun, but as all of you can imagine, especially after the last year and a half, it's really important to sort of dive down into these topics. So do you have a revocable trust? And a trust is different than a will. A trust is a private document, where a will is a public document, but do you have a revocable trust? And do you have a pour over will that complements that revocable trust? You may have these things in place. And if you don't, then go out and talk to an estate planning or an elder law attorney to put these things in place. As you can imagine, in my profession, we see, hear, and read things that are truly devastating to a family. And one of the things that really was tragic and sad is back on New Year's Eve, 2017, two families were down in Costa Rica and their plane took off and crashed into the mountainside. So outside of the tragic, headline that I read, I'm like, oh my God, this is just horrific with both families, literally both families dying, the entire family's dying. Was that then all of a sudden my financial planning hat came on, was like, oh my gosh, I hope they had their estate plan in place. Because even though there's not descendants within that family, I can only imagine not only the heartache, but the challenges that were involved in terms of dealing with that estate. So when you're working through your estate plan, a disaster clause is really important. So if nobody in my family's around, where does this information go? Where do these assets go? Does it go to a charity? Does it go to my alma mater? Does it go to another family member? It's really important to have these things in place. Obviously, not that it happens all the time, but again, it helps you become more organized. So oftentimes when we're visiting with clients and we're talking about their legacy plan or estate plan, one of the questions we ask is, hey, does your executor know that they're executor? And you shouldn't be shocked to hear that sometimes people are like, no, I just picked my cousin, or I picked this person, or I picked this friend. And I'm like, it's probably a good idea to let this person know who the executor is. Now, the executor comes in as sort of the guidance of the will. The will names the executor, and this is the person that you put in charge after you pass away to make sure all of your wishes within your will are carried out. And so ultimately, again, that executor needs to know that they're the executor. And what I'll gather to say is you should ask someone first that to be your executor, because it's not something that should be undertaken lightly. It is relatively straightforward, but it's not simple. There's a lot of things that are involved in terms of being an executor. So also what's important is, does your executor know where your important documents are? And most importantly, do they have access to them? So you're putting the executor in charge of your affairs. You want to make sure that they know where your plan is and how organized you are and where your assets are and what your wishes are, but also do they have access to that information? So oftentimes when we sit with people and we're like, geez, why don't you have a will? We get a myriad of different pieces of information. So again, sort of like we talked about in terms of not having a big estate. Well, I don't have much money. I don't need a will because I haven't hit the lottery yet. So another reason that you might not have a will is you're very confident that Illinois' intestate laws, which are laws put in place that just so happen if you die without a will, the state has it figured out and they will sufficiently direct your possessions to your family. You're dead, who cares? I've heard this a couple of times throughout my career, which is a little unsettling. One of the greatest compliments we receive is on the organizational structure that we put in place. So when either the kids or other heirs are dealing with the estate, they're like, wow, this is really well organized. So if you're dead, who cares is not really a good reason not to have a will. So maybe you have a soft spot for attorneys and you think they're underpaid as a profession, because the folks that are going to get involved in your estate are not family members. These are going to be attorneys in the courts trying to figure out where your assets go. So again, it's really important to make sure you've got these things in place. Or you believe, hey, when it comes to money, everyone will get along. And I can tell you, obviously, to the contrary, you may have faced this yourself, that when a matriarch or patriarch passes away, that things get a little wonky when it comes to money and relationships. So maybe you take great pride in paying more than your fair share when it comes to taxes, because without proper estate planning, you may end up owing the state a good chunk of money in regards to estate taxes. You think that no one in your family may need money for at least a year. Dying intestate is a very long, arduous legal process. And so if you're confident that no one's going to need any of your money for a year, you're good to go without a will. Also, if you die intestate, you don't believe your spouse is deserving of any more than 50% of your estate, because the way intestate laws go is that your kids will get half of your estate and your spouse will get half of your estate. That's the way that it's written in case you die without a will. And so what does that mean? Well, you just gave your kids, and maybe their young kids, half of your estate, and who knows what they're going to be doing with that money. I can guess they're not necessarily looking too far into the future. So the last thing is you just don't believe you're going to die. And so it's sort of tongue in cheek in regards to this, but ultimately, unless you figured something out that no one else is, we are all going to die at some point in time. We all are going to leave this place. And so again, reasons why you don't have a will, I've heard lots of different reasons. And ultimately, it's a function of making sure you have these vital documents in place. So let's talk a little bit about intestate laws and what happens. So you may have a will, you may have a trust, you may have all of these documents in place, but what I'm hoping to do is maybe make you, I don't want to call it an evangelist per se, but your older kids, right? Friends, colleagues, families, not that you're going to go around and asking anybody about this, but it's one of the things that when we're just having conversations with folks, when I hear people say, hey, I don't have a will, especially if they have kids, I get a little unnerved and I start having these conversations about the importance of it. But again, if you die without a will and you die with assets in your sole name, the state has it figured out. If your spouse and children survive you, the kids get half of the estate and your spouse gets half of the estate. The spouse can't claw back that money. It's legally in the kid's name. If only descendants survive, meaning that if your spouse and your kids aren't around and just you, your descendants will get all of your money. If only your spouse survived, this is the only time your spouse will get all of the money with no kids. If no spouse, no kids, but your parents, brothers, sisters, cousins survive, they all get an equal share. So years ago, I was working with a client, and so one of their cousins passed away. It was an older cousin. Cousin passed away, and the will wasn't very clear, and money literally descended on a whole bunch of different family members who didn't even really know who had passed away. And so again, from an intestate standpoint, the challenge is this money is going somewhere. But if no one survives, again, we kind of talked about this, uncle, aunts, cousins, whoever is in your family tree, they go up and then they go out, money will be dispersed from them. And again, not in a very efficient way. Again, this is done through attorneys in the courts from that element, which again, is very expensive and incredibly time consuming. Last but not least, if there's nobody in your family at all, you are literally the last in your legacy, that money will escheat off to the state. It generally doesn't happen that frequently, but again, the state has figured out what happens to it. If you've got family, spouse, kids, this is what happens. If there's descendants, no spouse, no kids, if there's a spouse, the state has had to figure this out because you can imagine, and the statistics are somewhat alarming, that nearly 70% of people do not have a will. So in my business, in my industry, we cannot guarantee too many things, but I will guarantee this, and I've talked to people about this before, and here is my guarantee to you, that if you don't have these documents in place, and if you go put these documents in place, a couple things are not going to happen. It is not going to change your life expectancy. I've heard this from people who have said, well, if I put a will in, then I feel like I'm going to die. I'm like, you're going to die pretty much anyway, but it's not going to hurt, it's not going to change your life expectancy. Conversely, by putting powers of attorney for property and healthcare in place is not going to change the probability of something bad happening to you. As a matter of fact, what we found is that when we engage with clients who don't have these documents, more times than not, it happens on a regular, frequent basis that when we do put these things in place, there's a less sense of stress. They're like, okay, so now I've got these documents in place, which again, on the flip side, will actually less stress may lead to a longer lifespan. So again, just by if you don't have these documents in place, but by putting these in place is not going to change those key elements. So we talked about death, and which again is not necessarily a fun topic. Now, let's talk about disability, which again is not a very fun topic, but the likelihood of you becoming disabled or having mental incapacitation is much higher than that actually of dying. And so do you have a power of attorney for property in place? So if something happens to you and you're incapacitated, you can't speak, who can act on your behalf? Who can write checks? Who can pay your mortgage? Who can pay your property taxes? Who can give guidance to the banker or to the investment professional on what to do with those assets? Without that document, no one's going to be talking to you from a legal capacity standpoint. One of the things that we've seen as of late is something called digital access. So I don't know about you, but a lot of my life is online, right? Through different apps and logins and things like that. Without that power of attorney for property that includes digital access rights, you might be cut off from access to those vital accounts, the online banking accounts, the online investment accounts, because you're not authorized. So if you happen to have a power of attorney that is more than 5 years old, 6 years old or longer, you may not have digital access rights within that document. So like a power of attorney for property and healthcare, we'd like to have those reviewed every 5 years or so to kind of keep up with what's going on in changes in laws. So let's talk about power of attorney for healthcare. Power of attorney for healthcare is another vital document. So you find yourself in the hospital and you can't speak. So you're in a coma or something happens and you can't speak on your behalf. Who do you want to come in and be able to give guidance to the doctors on your care and what the next steps would be? And so as you can imagine, healthcare today is very privacy orientated. I'm sure those of you who have been to doctor's offices, you've seen the myriad of different forms that you're signing to give authorization and access to, because healthcare is so privatized today that just getting information between one party and another is very restricted. So you want to make sure these power of healthcare attorneys are HIPAA compliant. So you don't know you have a problem until you have a problem. So a client of ours, their son was off to college, and we had guided them on making sure that upon the child's 18th birthday, hey, happy birthday, here's your gift. Oh, by the way, here's a power of attorney. So the child went off to college, found themselves in the infirmary in school. So the parent called down, and the administrator, the university nurse or doctor, was not giving the parent information. This is their child, and they would not give information to the parent because of privacy concerns. So the client ultimately faxed that paperwork down to the university only to learn, oh yeah, your child's fine, no problem at all. So again, you don't know you have a problem until you have a problem, meaning that you don't get access of information in regards to healthcare guidance and healthcare updates. So we'll talk about a living will and a post, but these are documents that kind of outline what do you want to happen if you're near end of life, right? So do you want to be kept alive on a ventilator or things like that, or you don't? So we'll go through these in just a moment. So a post versus a living will, and these are two separate kind of documents. So I won't go through all the nuances of these both, but they're two important documents. So the power of attorney for healthcare and a living will, those are generally put in place as a matter of fact. Like those are just kind of come along with you. The post generally is only kind of reserved for people who are seriously ill or frail. The post is in the doctor's hands, right? You have those on your medical records. And again, you want those two documents, the post and the living will, to be aligned. So the post will have things on there in terms of do not resuscitate or DNR or withhold food or fluids or things like that. And you want, again, to make sure that those two documents are in alignment in terms of what your wishes are. Now, the post generally, again, is in the hands of the doctor, where your power of attorney for healthcare is not. And again, if you're a widow or widower or a single individual, you want to make sure somebody knows where that power of attorney for healthcare is, because it may not be accessible, right? It may not be able to be easily found, where the post, again, may reside with your primary doctor or the hospital that you're at. So this is one of the areas that we've often found a great amount of contention with is your stuff, right? It's your personal possessions. It's not, hey, what happens to the accounts or what happens to the house? It's who gets mom and dad's, wedding rings, who gets grandma's brooch, who gets this letter that was written years and years ago from a favorite uncle or aunt or somebody from that standpoint. Again, we don't see problems generally come up in an estate until the matriarch or patriarch passes away. And this is where things get really challenging, is in terms of the sentimentality of a particular item. And so one really good way to sort of circumvent that and to try to create at least as much pleasantries, if you would, amongst the family, is to have a disposition of personal effects. You want to have a list of, this is where these items and where these things go, because the last thing that you want to have happen within your family is infighting amongst who gets your stuff. Because again, like I had mentioned, it's not generally the most expensive thing that people are fighting about. It's the sentimental items. And oftentimes, I'm sure if you've not faced this yourself, you've heard about things. Well, mom promised me this, or dad promised me this. And so mom may have promised two of the children or nieces and nephews different items. And again, one way to sort of circumvent that, one way to provide guidance, is to write that information down. Here's what I have, here's who it goes to. And what's also really what I'd encourage you to do is a reason why, right? It's that written legacy. I wanted you to have this because this reminded you of this, or you reminded me of this person, or so on and so forth. Again, that goes a long way in terms of not only potentially providing some guidance, towards your heirs, but also sharing, again, some of that sentimentality and wisdom in your written. But there's also now digital legacy that's available, video archives and things like that, where people are talking. Again, it's just another really great way of providing some guidance and providing some wisdom and some historical references. So we talked about Dr. Frank in the very beginning. And again, as I mentioned, we were very, very close. And one of the things that I was given after Dr. Frank's passing, which is literally a prized possession of mine, is a book of wisdom. It's the best way that I can put it. So over the years and over the decades, he had pulled all sorts of information together, everything from Dear Abby columns to Ann Landers columns to how to be professional and all these different things. And one of the pages in there is literally how to tie a tie. So that was Frank's way of providing guidance and wisdom to the next generations. And so when I was given possession of this, and a number of his family members were, like I had mentioned, it's one of my prized possessions. And it kind of goes a long way in terms of, just providing guidance. Hey, I was thinking about the next generation, and this is what we're giving. It may not be appropriate in all cases, but in this case, it meant a great deal to myself. So this is probably one of the most frequent challenges that we face in regards to working with clients as a certified financial planner. Are the titles of your accounts aligned with your legacy plan? So oftentimes what we find is that clients will go out and they'll have their estate plan done. And in this case, the vast majority of the clients, let's say, have a trust. And so we'll look at and we'll review our clients' estate planning documents. And then we'll review all their different accounts, their bank accounts, their brokerage accounts, and all the different accounts that are out there. Invariably, we find a big disconnect between the document being in place and the titles of accounts not being updated. Because invariably, people think, hey, I've got my estate plan in place, but they haven't updated the titles on their accounts. And this, again, by far is one of the more common occurrences that we find. And so again, similar to the intestate laws, and we had talked about this in an earlier slide, where there's something called, let's say, a pour over will, because that's a contingency plan. And again, a pour over will with a trust. So you go out, you go have an estate plan or legacy plan done, and that includes a trust. Well, that will most likely is what's known as a pour over will that says, hey, if I forget to put any of my assets, if I forget to retitle my assets into the name of the trust, what the pour over will says, great. So take those assets and pour them over into the trust. But here's the problem with that. A will is a public document. And one of the reasons why you have a trust is for privacy and to avoid probate. And all of that is for naught if you don't title your accounts properly, because what will happen is that will gets put into the court system, public document, And even though it says all of these assets go over into the trust, there's got to be a listing of those assets, so everyone knows your own financial affairs. Not only that, but if your assets are over $100,000 in the state of Illinois, you're now subject to a full probate. So again, when you have these estate planning documents done, make sure you or your estate planning attorney goes the extra step to have those accounts aligned with that trust and that trust title. So same goes for deeds on property. So again, a deed on property, you can have what's known as a quitclaim deed, which means that, hey, take the property out of my name or mine and my spouse's name and put it into the name of the trust. So what's important, again, is title supersedes will. And this is what I mean by that. So frequently what we see, especially again when we're dealing with a surviving spouse or an individual, is that they will include someone on their bank account at joint tenancy. Now, with all due respect to the banking community, oftentimes this is lost on the individual banker. And so when you have an account that is, let's say, your name, and then let's say the name of one of your children in joint tenancy, title supersedes will, which means that your will may say, hey, I want all my assets to be split amongst my let's say four children. But if your main account has your name and then joint tenancy with one of your children, that child gets all of those assets. Now, most often, that child will then kind of figure out a way of getting those assets to their siblings. But as you can imagine, sometimes that doesn't always happen. So don't forget, title supersedes will. So if you have an incorrect title on a property or a title that's not aligned with your legacy plan or your estate plan, that is a recipe for disaster. That creates a lot of challenges. For those, again, who might have properties, a cabin in Wisconsin or another state, one of the things that a trust is really important or really powerful for is to avoid something called ancillary probate. So you have your house here in Winnetka, and let's say you've got a cabin in Wisconsin or a property in some other locality in the United States, and you pass away without having that property in trust. Well, you might be subject to ancillary probate, which means that you need to go find an attorney out in that state, out in that county, to then run through a full probate of that particular property because of the fact that you held it outside of the state of Illinois where you resided and where you passed away. Ancillary probate is not fun and it's bad. And it can be, again, easily avoided by having a revocable trust in place and then ensuring that you change the title of that property out of the state into the name of the trust. It's just an easy, efficient way of making sure that you're avoiding, again, a lot of costly headaches and time delays for your heirs. So one of the things I always like to do is to bring in stories from my clients. And so this is one that was just absolutely mind-boggling to me. So I have a client whose husband was on the title of an automobile. So it was just in the husband's name. And so the husband passed away. Now, we weren't aware that the title was in just the husband's name. We thought it was in both names. And so as the client told us, hey, the title's in the client, we're like, oh, just go to the DMV and go get it changed. I cannot tell you, and now this is way before COVID, so I can't tell you the challenges that were involved of getting the title moved from my deceased client's name to the spouse's name. It was mind-boggling and crazy the amount of time, energy, and effort that was put in to have this done. So the good news is that at least Cook County, and I believe the state of Illinois, has something called TOD, or transfer on death, in terms of title for the car, where if your car title is not in a joint tenancy, you can name someone on the title after your death. So if you're a single individual, widow or widower, I highly recommend you look into this because you want that title to transfer, again, along with your other assets as seamlessly as possible. So another element that we often find is that the beneficiary designations on retirement accounts and life insurance may or may not be aligned with what's going on. Again, like what we talked about in terms of title superseding will, beneficiary designations supersedes the will. So again, you have a large life insurance policy. Your estate plan says my kids split everything, 25% amongst the 4 kids, and yet your very large life insurance policy is in the name of one child for whatever reason. Or what we've seen from time to time is we have a divorce situation and the life insurance is the name of the ex-spouse. This is not necessarily common, but it is not uncommon. And so again, realize that beneficiary designations supersede will. So someone shows up with a death certificate, they show it to either the life insurance company or the retirement account, the custodian, or to the brokerage company. Those assets flow right to the beneficiary. And so you can unintentionally disinherit people because, again, you're not organized in regards to where your beneficiary designations are. Another challenge is what I'll call overfilling the bucket, where you want your assets to basically be split amongst, let's say, your kids, but one child may be the beneficiary on one account or another account. And again, it may not be in alignment with what your wishes are. So one of the things, again, we talked about is life changes, right? Widow, divorce, the kids, things are going to happen within your life, and you're going to want to go back and make sure that those beneficiary designations are up to date in terms of where you're at in the chapter of your life, but also most importantly, that it's aligned with your estate plan. Because again, those are 2 separate things from that standpoint. So this is the fun part. So you have an organized system for your records. So in our practice at Engage Wealth, we create personal financial balance sheets that are just not assets and liabilities, but have everything from ownership to account numbers. It's a very comprehensive outline of a client's snapshot of their personal financial situation. So we highly encourage folks who are outside of obviously the firm is to have something as similar as possible. So you want to obviously keep this in a very safe place, but where are your assets? Where is your information? Where do things go? Or where do people need to sort of figure out if you're mentally incapacitated, who has access to what and where are those assets? So important documents, who knows where they are? It's really important. And again, this seems so common. Of course we know this, but oftentimes this is not done. Where are your important documents? Where is the outline of where these things are? So one of the things that we've heard about now, this is more anecdotal, not experiential, is safety deposit boxes. So as you can imagine during COVID, it's one of those aha moments where we heard these things where the banks were closed and they weren't allowing anybody inside the bank. Well, if somebody was incapacitated or died and those legal documents were in that safety deposit box, the originals, you didn't have access to those and you were stuck. So one of the things we started talking to people about is, hey, go get a fireproof lockbox and put that somewhere in your house that if something does happen, someone either has the access code or whatever, they can get to it. Again, we are very hopeful that a COVID event does not happen where banks basically lock down, but you just don't know. So I'm going to share Chester's map. So Dr. Frank had a cousin his name was Chester. And so Chester was older than Dr. Frank. And again, as I mentioned, Dr. Frank was well into his 80s. And Chester asked Dr. Frank to be his executor. And I said, yes. Dr. Frank asked me, hey, this is what my cousin is asking for. And I said, sure, no problem at all. Just ask Chester where all of his information is. Chester would refuse to tell Dr. Frank where all of his information was. And so I gently told Dr. Frank, just tell Chester no. So it took a little bit of time and an actual meeting between Dr. Frank, myself, and Chester, where Chester gave Dr. Frank basically a map of where all of his information was. And this is the great part about what I do in terms of my profession, because you can't make these things up. So literally, Chester gave Dr. Frank a schematic on where to go into his house. And Chester was never married, lived on his own. Where to go in his house, where to go down the basement steps, what board to pull off the wall to reach in and get a cigar box that had literally his financial roadmap in it. I can't make these things up. And it was the most amazing thing that a person had, because if Chester would have passed away, nobody would have known that, other than if somebody years and years on were refurbishing the basement, not only would they have found a dozen or so bank CD books in the cigar box, but also thousands and thousands of dollars of cash, because Chester was a Depression era client. And of course you hid these things away. So it's vitally important to make sure that don't go the route of Chester. Make sure that individuals, trusted individuals, know where this information is and has readily available access to them. So this pertains more towards individuals who are surviving spouses or single individuals that are out there. We highly encourage clients, again, widowers, especially in advanced ages, that they have an emergency list that they literally put on their fridge, and it's either in red or yellow or something like that. Because what you want to make sure is not only or somebody coming in, but they know who the doctor is. If you have spouse, children, or a friend, who's your next contact? Do you want to, who the contact is for a priest, chaplain, or rabbi? If you have a certified financial planner or other professional helping you and an attorney, have this displayed and visible. Make sure somebody knows that, because again, if something happens to you, death or incapacitation, it's often good guidance to make sure that someone knows where to turn next. It's again, vitally important to have that in place. So who is in your professional circle? Who do you have in place to help you with all of this? Is it a certified financial planner practitioner, an estate planning attorney or elder law attorney, an accountant, an insurance agent, a broker or financial advisor? Who do you have in your life that helps guide you through these different elements? And so that you might have a trusted friend or a trusted colleague, again, who knows where your information is, that if something happens to you, you know definitively that they will help you and take care of you. So it's critically important to make sure that these people are there and again, not only guiding you, but also potentially giving guidance to either your heirs or to others as well. So now we're going to go through one of the most, another common question that clients ask us: how long do I keep my stuff for? So I can only imagine, again, how much paper and information people have. So when my older clients are downsizing their house, one of the biggest challenges they have is, what do I do with all the boxes and all the files and all the checkbooks and all the things that are in here? So we're going to spend a little bit of time to go through one of the more important elements of what to do and how to do in regards to what you have in terms of information. So let's talk about, first and foremost, tax returns and supporting documentation. So tax returns, you should keep at least 7 years worth of tax returns. And now the IRS can only kind of go back 3 years and kind of look for your information. But if you've underreported your taxes, the IRS can go back and request those tax returns for you. And most importantly, the supporting documentation, because obviously the IRS has your tax returns, but it's your supporting documents that are really important. So we encourage folks to have at least 7 years worth of that information on hand. Everything else you can get rid of. Now, if by chance you are fraudulently reporting your taxes, yeah, keep them all, because the IRS has an unlimited look back in regards to fraud. But ultimately, again, keep at least 7 years worth of taxes. The rest of it you can get rid of and shred. Brokerage statement and investment records. So most of the things today we're finding are online, right? So they're in Adobe files or PDF files, or you have access to them. But if you have physical statements, and we have a wide variety of clients who like to keep physical statements, my guidance is this: is always keep the year-end statement, that 12/31, name your year, keep that statement in your files. And then as a new monthly statement comes, go ahead and as the next monthly statement comes, get rid of the previous month, unless it has information on buys or sells, and it gives you what's known as cost basis on there. But ultimately, you should have, over 10 years, you should have 10 statements that are the year-end statements and then the most recent statement. And then get rid of the other statements and just shred those as well. Retirement plan statements, again, if you're making contributions to IRAs, you want to have proof of those contributions, especially whether it's a Roth IRA or traditional IRA. You want to keep those year-end statements that show your contributions. And again, monthly and or quarterly statements to keep. Home improvements and real estate records. So way back in the day, the way that real estate used to be taxed is that you roll your gains into your next real estate, and then upon age 55 or beyond, you're able to, then take that tax hit. Well, those rules have changed dramatically. And so one of the things we encourage clients, as long as you're in your primary residence, any major improvements you've done with the house, keep a record of that, right? So get a log, keep a record of that, because you don't, if the IRS ever challenges you on the sale of your property, and so let's say you bought a property for $100,000, and now that property is worth $1 million today, but you put a lot of money into that property, you want to have those records to be able to tell the IRS why you get that adjustment in terms of the overall price. So let's say you bought a house for $100,000 and you put $400,000 into your house. Well, your adjusted cost for your house is now, let's say, $500,000, and the tax liability on that is very different than it would be if your tax liability, if your purchase price was $100,000. So any major improvements, keep good records on that. Credit card statements. Again, keep 1 month worth of credit card statements. But if you've had tax-related transactions, you've made a donation in regards to a donation through your credit card, you want to kind of keep those on hands too. But again, you want to reconcile your credit cards, making sure there's no fraudulent transactions going on. And then again, keep that 1 month and then move forward. Most credit card companies today, they're offering year-end comprehensive statements. Again, you can kind of keep that and get rid of all the other ones. Bank statements. Keep monthly bank statements for 1 year. And so the difference in my opinion is that you want to keep a whole year's worth of bank statements. I can venture to bet that there is probably no one under the age of 30 who has ever reconciled their bank statement. They see it online, they see it on their app, and they're good to go. But making sure that you have your bank statements is really important. And again, if it's related to taxes, you want to keep those within the next 7 years. So this provides, the bank statements can provide proof of income from interest-bearing accounts. It could be a record of tax-related transactions. So bank statements, again, are a little bit different. You want to keep those around a little bit longer. Last but not least, wills, advance directives, and trusts. You want to have original copies. So original copies are really important. Again, hopefully in a fireproof vault, an attorney has a copy, and maybe the person who you've named as trustee or such, or from a will standpoint, the executor have a copy. This is something, again, that we're often asked. So if you update your estate plan, so you've made some changes to your will or you made some changes to your trust, and again, lean heavily on your estate planning attorney or other law attorney for this, you almost definitely want to destroy the old documents. What you don't want to have laying around, especially if you make changes on who gets how much money, is you don't want to have old wills around that people can rummage through and start asking questions about your estate plan. So as you can imagine, if you change who gets what monies and inherit, people are going to guess what's the old will, what was their intention, and things like that. It goes a long way to avoid questions and unnecessary legal actions if you keep just the most current will and or trust in place. So what to do with your paper? And it's a very, very simple answer. You shred everything. So the good news is right now it's June 23rd. So the Village of Winnetka is offering a paper shredding event over at the Public Works Department on Willow Road. I think it's from 9 a.m. to 12 p.m. on August 21st. So one of the nuggets to kind of take away from this is we're giving you some guidance and guideline on what documents to keep. So any old documents you have, whether it's old check registers or things like, all the tax returns, all this information you may have that you don't necessarily need, go bring those all the way to the Public Works Department and just put them into the shredder. It's just a convenient, the timing on this could not be better. Another element, and this is a more crucial element of this, is you have a computer. You may have an old computer. You may have an old phone. What you don't want to do is just throw that old computer into the garbage. You have a lot of potential information on the internal hard drive of your computer. You want to definitely make sure that that hard drive is erased, and not just, hey, delete the files and we're good. We're talking Department of Defense sort of level of eradicating that hard drive. Because as you can imagine, people are very sophisticated today that if you just go in and delete things, they can go in and actually read those off your hard drive. So companies like Best Buy and some of the office supply stores, they have free services where you can dispose of your computer, but you may have to pay them a couple dollars to fully erase your disk. Now, there's implicit trust, obviously, in handing your computer over to someone else in regards to being able to erase that and having that belief that it's erased. But again, you don't ever want to throw a computer away that you just put to the curb where someone can get that disk drive. Other items that I've heard and other things that people have done, literally they've taken their hard drive out of their computer and taken a sledgehammer, a hammer, or an axe and just literally beat up on the hard drive so the disks can't spin and nobody can get a hold of it. I don't recommend that. I recommend doing it the right way, going to a professional, making sure, maybe potentially getting a certification that is erased, and then turning over that computer. So let's talk about that sort of bridge, right? So you put a computer on the curb, somebody gets your sensitive information, and now you're potentially subject to identity theft. So identity theft is a critically important and unfortunate trend that's going on in the United States. And so we've done presentations on elder abuse and financial fraud, and it never fails to concern me of just the rampant nature of this. So what are ways of potentially combating identity theft? And so there are a number of different companies out there that for a relatively high fee, or it seems like a low fee, but on an annual basis, they'll monitor your credit. Well, one of the things that I often guide people on is, your credit report is available for free. So the federal government has told Experian, Equifax, and TransUnion, hey, you need to offer free credit reports to people at least once per year. And so I heard people just going in and pulling down all three reports and just kind of looking at all three of them. And I'm like, that's not what we want to do. What you want to do is once every 4 months is go in and pull down one report, go in and pull down an Equifax, an Experian, and TransUnion, and just kind of look and understand what you have in terms of open credit cards, history of account opening and closing, how many times you paid a card. But one of the things we often guide people on is if I'm trying to steal your identity, one of the first things I'm going to do is I'm going to change your address. So when you're looking at your credit report, one of the first places to go is your address history. And if there's an address on there that you do not recognize, you immediately want to call that credit reporting agency and ask them what address that is attached to what credit. Because that is the simplest way of making sure that I can be successful in identity theft is opening up an account in your name and then changing the address. So putting a credit freeze on is a lot more easier today than it was in years past, and that was because of the Equifax credit breach. So putting on a credit freeze, what that means is no one can open up credit in your name easily. It takes steps to open up credit. So if you're at a local shopping mall or a local store and they're offering you 20% off if you open up a credit card, at that store, if you have a credit freeze, you can't do that because it's locked down. You have to unfreeze your credit and then refreeze it. So we often guide clients on being more proactive towards a credit freeze than not, because it's not very often that you're opening up a credit card or getting a car loan or refinancing your mortgage. But you just need to be aware that if you're going to be doing those things, hey, you need to unfreeze your credit. It's just another safety measure to sort of protect who gets access to your information. So credit card benefits. More and more credit card companies are offering credit monitoring, where it's embedded in the credit card that you use. So instead of paying somebody a monthly basis, the credit card companies will notify you if someone's trying to open up credit in your name. So we're seeing less and less of this, but we saw a lot of this before the financial crisis in 2008, 2009, where you were getting continual offers on credit cards, right? You were getting besieged in the mail. Well, one way to sort of get out of that and get rid of that nuisance is to do the 8885 opt-out, where you put your information in And credit card companies will no longer be sending you offers for credit cards in the mail. So this list of items that I'm going to provide you in terms of identity theft protection, protection seems pretty straightforward. But what's important is I can't tell you time and time again how people fall prey to this. Again, I mentioned that we do elder financial fraud presentations. In one of the presentations, I was humbled and surprised at how many people came forward to say, yeah, I was the person who gave my information over the phone and this is what happened. Especially for our older clients and the elderly, they fall prey to this because, again, the calls that you're getting aren't pleasant calls. These are calls that have a sense of urgency and, oh my gosh, and so ultimately you end up giving up information that you can't. And again, cell phones, it's incessant how many calls, at least I get it, I know others get, in terms of trying to get information for them. Never give important information over the phone, ever. More and more today, we're seeing on websites that you've got this lock in the upper left-hand corner. So before you start putting your credit card information online, make sure you see that lock in the upper left-hand corner before you're putting any kind of credit card information online. One way to combat it, again, from a credit card perspective, credit cards generally don't hold you accountable if somebody uses your credit card for fraud. But for my clients who are really wary about putting any credit card information online, what I tell them is, go get a credit card that has a small balance, a $500 balance, a $1,000 balance, because the likelihood of you buying something online over $1,000 is pretty low. So go out and get a credit card that has a low maximum balance. Just again, it's not necessarily for protection per se, but peace of mind. Avoid online use of debit cards, critically important. So generationally, our younger clients and kids of our clients are using debit cards rather than credit cards. And it's actually counterintuitive. And I've been actually trying to buck that trend and tell the clients, have them use credit cards. Because if you've got money taken fraudulently through your debit card, that money comes right out of your checking account. And so you've got to fight with the bank to try to get that money back. And obviously, as you probably are aware, it takes a long time to get that money back, if ever coming back. Where again, on a credit card, the credit card company is paying that fraudulent person, and then they're not making you accountable to pay that bill. Email, distrust email attachments, things that come to you, whether it's a PDF or a picture or something like that, or isn't this funny or things like that. Please distrust email attachments. It's not, oh, I've sent this to a friend and I know this. Distrusting email attachments is really, really important. I mean, the news headlines are filled every other month with a major breach in some sort of organization. People have your information. They have your information. You want to be as vigilant as you possibly can when it comes to emails in terms of not replying to any unsolicited offer or any unsolicited attachment. Phishing and smishing. Phishing is where you get an email and someone's like, hey, we have a problem with your, name your bank, name your financial institution. They'll send out millions of emails. And by chance, obviously somebody most likely has that account. Well, they'll, again, put in their account information, date of birth, social security number. Be very, very careful of that. The new thing that's coming out is smishing, where you get a text message on your phone and they're asking you for private information. Again, be very vigilant against people asking you for information. When in doubt, don't reply. If you get something about your credit card, oh, there's fraud activity or your bank is fraud activity, literally just delete the email and call the institution. Directly call the institution. Someone calls you on your phone, cell phone or house line, and they're asking you for information because it's fraudulent, say thank you very much, hang up, and call that institution that they're talking about. Then you'll be able to verify if there's really a problem. So let's make a deal. So those of you of a certain age on this presentation will know what I'm talking about. Monty Hall, let's make a deal. Hey, do you have a safety pin in your purse, right? And someone will pull out a safety pin and he gives them 50 bucks. Think about if you would lose your purse or you would lose your wallet, what's in there, right? So what information is in your purse or in your wallet? Can you identify all the different things that are in there? Your credit cards, your identification cards, social security card, cash, your debit card, what is in that card? Because if your wallet is stolen, who do you call? because the 1-800 number is on the back of the card. So what I often guide people to do, whether it's to take a photocopy or a picture, is understand what's in your wallet. Now, this is a snippet of what's in my wallet, just some things that are in my wallet. So from that standpoint, I know what's in there. So if someone steals my wallet, I'm not going to have to rely on my memory, nor am I going to have to worry about, wait, what 800 number do I call right away to make sure that I lock up all my cards? What's really intriguing about this is that I tried to copy the cash that was in my wallet, but our color photocopier would not allow me to photocopy cash. Go figure. So again, this kind of goes a long way in understanding if something is lost or stolen, what's in it, and what measures do you need to take quickly to make sure that nobody is fraudulently using your identity or your credit cards. Okay, lost but not found. So if you haven't paid attention to anything we've talked about and you don't put anything in place, and there's an account that you have or an estate has that no one sort of goes after, those monies will escheat to the state, meaning that the state now is held in possession of your assets. The good news is that if you have this happen to you, and I recommend people doing this just today, is you can go to Illinois Treasurer's website, right? iCash Illinois, IllinoisTreasurer.gov, and you can go to this website. You can put in a name, and I just picked Sam Jones, and hopefully no one named Sam Jones is on this call. And so all the different elements for a Sam Jones at a given address will show up in terms of, hey, what you're owed. And so as a routine basis, I kind of go through this to see what's going on and to see what's out there in terms of, do I have any assets? Do I have any checks or dividend checks or things or bank accounts that were closed that I kind of forgot about? The state will ultimately have this. And the state really does have a desire to give you your money back and to make sure that it goes to the rightful owner. So you go through this, you pick a claim button, and then all of a sudden you have a claim, and then you can claim that property on behalf of yourself or an estate. Now, what's really important is to remember that if you're doing this on behalf of a deceased individual, it's relatively challenging. There's a lot of documents, original documents that you have to have in place to go do this. So again, making sure you're financially organized will go a long way in keeping not only you, but also your heirs from having eventually to keep looking at the state's website to see if an account happened to make its way through. So with that, places to go for help. So I'm a fee-only financial planner, and you can go on NAPA.org to find a fee-only planner. You can go on plannersearch.org, which is the Financial Planning Association's listing of local financial planners. Let's Make a Plan.org is the Certified Financial Planner Board of Standards, CFP, list of where to go. Estate planning attorney, elder law attorney. A lot of the things we talked about have to do with legacy planning and estate planning. Make sure you find someone who specializes in estate planning and elder law. So I am a big fan of Terry Savage. She and I would say, are colleagues. We talk often in regards to what's going on. And she's got this very simple financial organizer that's out there. So if you're not engaged with a professional, that's okay. Here's a place, a very simple organizer for you to help you, at least with a template in terms of getting organized. So I desperately try to finish on time. It's 8:04. So I wanted to make sure that we had as much information as possible. There's a lot out there. It's sort of a mini fire hose in terms of that. Again, this is being recorded. So as I went through this, and I know I went through this kind of quickly, you can always go back and Jill said that they're going to be putting this on the YouTube channel for the library. You can go through the presentation again, and then you have this information readily available at a slightly slower pace. So with that, I'd like to open it up. If anybody has any questions, follow-up questions, comments, concerns, I would love to hear them. And if you look at the Q&A button in the bottom of your Zoom Q&A, they should show up there. And anonymous attendee said, if I want to start planning, where do I start? Excellent question. So where do you start? You start with the basics. You start with what I own, assets, and what I owe being liabilities. And you basically list out, here is my local bank account, here's how it's titled, you could potentially include the balance, and then here's the account number. And then for every asset and every liability, you just list this out and you have that list. And as new chapters in your life come, you open an account, you close an account, make sure that that's an up-to-date list. All it takes is literally a piece of paper and a pencil, or a computer and a printer. And that's a good way to start. So a copy of the presentation, I will give Jill a copy of the presentation. It'll take me a day or so. So what I would encourage you to do, and hopefully Jill's still on the session and she'll be able to corroborate this, you can reach out to the library, ask for Jill, and she will give you a PDF copy of the presentation. So thank you for the ask. Thank you for this program. Question, sorry. If there was a year where you did not file taxes but should have, and you're usually owed money back, is there a place to reclaim the money? Now, after 3 years, my understanding, and again, I'd love to be corrected on this, if you have a refund that is due to you that's over 3 years old, the IRS, you're not going to get that money back. Again, if you owe money to the IRS, you do not want to be a habitual non-filer. So one of the biggest issues we face with clients, and again, it doesn't happen from time to time, you never want to run afoul of the IRS. It's critically important to make sure that you are always putting your taxes in on a timely basis, because the IRS is not very forgiving when it comes to those things. And you're welcome. Okay, thank you. So any other questions, any other thing that's out there, we'll kind of hang around for another 30 seconds or so. I hope you found this to be informative. Again, the goal is to give you a nugget or two or potentially 4, but if you already have all these things in place, that's great. And again, whether you have these things in place, we often try to, again, have our clients talk to the next generation, their kids and their grandkids, depending on their ages, to make sure that they have these documents in place. You're not really caring how much money they have or things like that, but it's critically important to have this foundational information in place. So thank you for the feedback on a great presentation. Greatly appreciate that. So I can't tell if anybody's typing feverishly, but if there's others still on, I think there's 17 still sort of on here. So if there's any other questions, would love to answer them in the last closing minutes. I don't see any other questions. So again, it's a lovely evening outside. So I want to thank all of you for attending this evening, and thank all of you for your time and attention. And again, if these are things that you already have in place, terrific. Just spend the time, energy, and effort to make sure that all of these sort of elements that we've kind of put together and outlined to you are in place. So again, I want to thank you so very much for attending, and I wish all of you a very happy evening.
Yes, and I want to thank you, Ed, for this great presentation. And I will send the YouTube link and a copy of the presentation to everybody who registered.
Excellent. Thank you so very much, Jill. So thank you all, and you all have a great
Thank you. Yes. Thank everyone for coming.
Thank you. Bye now.
Bye-bye.